Hello there, this is James, and you're watching Tixee Live. Sorry about that, I forgot to turn the background music off. And anyway, a very good morning to all of you, and all of you a very happy Tuesday. In today's program, I want to chat a little bit about the fact that there is hope once again in the market of the Fed slowing down with their aggressive interest rate cycle. Plus, how it is very scary at the moment to be a Twitter employee. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, like I said at the beginning of the program, I want to talk a little bit about the fact that we have a little bit of hope in the market again, that the Fed tomorrow will indicate a slowdown in their aggressive interest rate cycle. And it's been helped a little bit by actions of another central bank today. And that was obviously the Reserve Bank of Australia, because they continue to put their foot on the brakes. Now, the Reserve Bank of Australia raised interest rates today by 25 basic points to 2.85%. Okay. Now, that's a slowdown on how they've been acting previously. If you have a look at the last couple of interest rate hikes, in June it was 50, July 50, August 50, September 50, October 25, and today 25. This is, again, like I mentioned, giving hope to the market that indeed a number of central banks, their aggressive interest rate cycle is coming to an end. In fact, Morgan Stanley, Goldman Sachs, Bank of America all expect a pivot is on its way. They all believe that the Fed is finally going to slow down on its aggressive nature of interest rate hikes. They still think that tomorrow they're going to do 75, and they know that. We all know that. Most likely they're going to do a 75 interest rate hike tomorrow. It's the press conference, which is really, really important. Hello there. Hello there. I hope you're well and having a great day. Thank you for coming. I hope you're doing good. So we all know they're going to do 75, but it's the press conference is where the market is pinning its hopes on. Hopes that in the press conference, they're going to be dovish. And they're going to say that come December, they may do less than 75 because they've done 4 75s back to back. If they proceed tomorrow with 75. In fact, Bank of America's Michael Galpin, he says the November FOMC meeting is not about the November policy rate decision. Instead, the meeting is about future policy rate guidance and what to expect in December and beyond. Now, JP Morgan Chase has also jumped in. They said, this is their trading desk, he said, if we do potentially get a dovish announcement tomorrow in the press conference, this could lead to a 10% rally in the S&P 500. Hey, James, I think they'll do a 75 a couple more times, then come down to 50. Again, if you asked me this, good question, a good point. If you asked me this a little while ago, I would say, and I have said this in other videos, when the market has thought about a pivot, that the market is kidding itself that they will start to slow down. However, I'm beginning to think they may actually start to slow down a little bit. And I tell you the reason why I think that is because this initial hope, which we've seen over the last week or so, was all down to the fact that the Wall Street Journal published a report that hinted that several Fed members, were beginning to think about slowing down. Now, I know it's only a report in the Wall Street Journal. However, the last time the Fed accidentally let something slip in the Wall Street Journal, it was like an early warning indication to the market that they were going to do something. The last time it was the fact that the market was expecting 50 rate hike, But in fact, this little thing slipped out to the Wall Street Journal that said that they're going to do 75. So this could be also the way, the Fed's way of sort of telling the market we're going to start to slow down. But again, you could be absolutely right. I mean, I think their target is 4.5 to 5% interest rates, and they've got a little teeny weeny bit way to go before they get there. But yeah, it's a good point. Good point. But like I said, there's so much hope on the market at the moment. Okay, so much hope on the market that we are going to start seeing a slowdown, because there is hints, there is some members who are looking to start slowing down the aggressive nature of it. So anyway, put it in your diaries, get a pen and paper, write it down. Tomorrow, big event, FOMC press conference due at 5:30 p.m. UTC. The interest rate comes out at 5 p.m. Again, unless we are really gobsmacked and really surprised, then they do something different. Most likely it'll be 75. Okay, but it's the press conference. That potentially is the key. Anyway, currently at the moment, because of this, the market is pretty risk on, and we're seeing the dollar, the greenback, under a bit of pressure. Let's have a quick look and see where the market is at the moment. Let's start with the euro. Euro was trading around the 0.98 level. It's now currently trading at 0.99246. Okay, so slightly up. This is on the 30 minutes. So it's above indeed the 50-day moving average, and trading around about the 100-day moving average. If we look at a daily chart, it's still under both. So indicating that we're still potentially in the long term in a downtrend at the moment, but it is beginning to try and bounce back. So it's better than yesterday. So slight dollar weakness. If we have a look at the sterling, the cable, again, it was around the 114 handle yesterday. Okay, it's currently trading now, as we're seeing a little bit of dollar weakness, at 115.32. Again, this is on the 30-minute, both above the 100 and the 50. On the daily, though, okay, we're trading above now the 50 moving average, but not quite above the 100. So realistically, we're looking around about the 1.17211 mark as a potential area of interest on this pair. Dollar yen, similar story. Again, this is on a daily. Okay, as we can see, we saw the dollar fighting back, but because of this pivot hope, we see the dollar slightly pressured, currently trading at 147.22. I'm pretty interested around the Fenerbahce level 23.6, potential area of interest at 146.81. Gold, again, my beloved yellow metal, trying to bounce back, but really range bound between the potential support at $1,615.69 and a potential key resistance level of $1,667.86. So range bound between those two levels. Don't forget, the yellow metal is also benefiting a lot at the moment because bond yields are also lower. So this is helping the yellow metal. S&P 500. Okay, again, it's 3,906 points. So for the day, it's still performing slightly better at the moment. I'm interested in 3,961 points as a potential area of interest. There is a lot of talk. If we do get a good indication, like I say, that JP Morgan saying potentially a 10% rally, if we get a dovish announcement or dovish indications in the press conference tomorrow, there is talk that maybe we could see maybe bound to go to around about the 4,100 point level if we do get optimism on the market. So there we have it. So something else which could fuel this, which is happening today, could also drive this a little bit as well, is we have the US ISM manufacturing due today, and that's due at 1 p.m. UTC. Expectation is for it to come out at 50. Previous reading was 50.9. Now, don't forget, 50 and above is still pretty good. It's still anything below 50, bad news. Anything above 50, well, 50 is neutral. Anything above 50 is good. So if it starts hitting 50, it's neutral. And bear in mind, previous number was 50.9. Sorry, excuse me. Sorry, I do apologize. Does sort of potentially indicate that maybe there is a slowdown. And if we are seeing clear indication of slowdown in manufacturing, again, the market will then think this will be enough to calm the Fed down. So that'd be worth watching today. And other things I want to share with you as well. Vice versa, when do you think stocks will stabilize? That's a really great question. Look, at the moment, we've had a very long bear rally. This year has been not a bear rally, sorry, a bear market. A bear market. And I think, like I say, we are possibly, if this pivot hope comes in, potentially we are set for what's known as a bear market rally, which will give it a bit of a boost. Do I think a complete change around in the overall mood of the market? No, I don't. The reason why I say that, even if we start having a slowdown in interest rate hikes, which is spooking, there is very scary economic signs that we are brinking on the edge of recession, and that will put the market in fear as well. So I think we're a long way off for a while till we get stabilized. Don't forget, there's talk of the US falling recession in first quarter one in 2023. UK will fall in recession before that, and so will the EU, most likely, and that's going to unstabilize the market. So we're not going to have a plain sailing quite just yet. But very good question. Very good question. In other news, I want to talk about Twitter, because at the moment, Twitter employees are living in absolute fear. As we know, Musk completed his takeover on Friday, and basically now he's the sole director and the CEO after he fired the whole board and all senior management, which includes the CEO, CFO. So he's now basically the sole owner and control of it all. And he's looking to go through the workforce and see who justifies their jobs. In fact, employees are being instructed to work between like 12-hour shifts and 7 days a week just to meet some incredibly tight deadlines Musk has put in, like his new verification, the blue tick on the Twitter accounts he wants to put in. Rumor has it he wants to charge users for the verification, the blue tick service, $20 a month to have that. So obviously, at the moment, it's free. So at the moment, there's a lot of tight deadlines. He says by November, he wants it all sorted. So he is, it's probably not a very nice working environment at the moment, is Twitter. So it'll be interesting to see how that develops. BP as well, something else I wanted to share with you. BP reports huge profits for July to September, due obviously to high oil and gas prices. BP actually made $8.2 billion during that time, and that's more than double the profit they made in the same period last year. So huge profits. And they have said, because of obviously the UK windfall tax, they're going to be paying about $8 million in windfall tax, which will obviously help the new budget for the UK, which is due in a couple of weeks' time. Major events to come this week. Of course, we got ISM manufacturing today, like I mentioned. ADP unemployment change tomorrow. Fed interest rate decision. But it's the FOMC press conference. That potentially is the biggie. Then Bank of England interest rate decision. US ISM services PMI. US non-farm payroll. And US unemployment rate. Will we start to see a slowdown in the labor force in the US? The NFP is potentially a big event as well. The market, as it currently stands, the FTSE currently in the green, like I say, Hope 1.27%, DAX currently trading in the green at 0.84%, and Eurostock 50 currently trading in the green 1.27%. Don't forget, like these two fantastic individuals. No, it's not just for BP. You're absolutely right. Shell made a huge profit, absolutely gigantic. Yeah, well, this is it. This is the question. The windfall tax, like the UK is trying to put a windfall tax to these big oil companies, because they're making such huge profits, so they can start helping out with the cost of energy. But you're right. I mean, like I say, at the end of the day, companies have a duty to their shareholders as well. So they obviously have to share with the shareholders. But again, it's a moral question. Is it greed, or is it the oil companies have a look at what they do to the Joe public? Do they have the responsibility for that? And not being funny, You know, the prices of gas and oil is dictated by the market and the market conditions. They can't control it. So there is that question as well. But it's a very good point. It's a very moral ground to talk about and look at. Very moral, difficult moral question to do. The windfall tax, like I say, they're going to pay 800 million to the UK government, which hopefully will go towards the right things. Brilliant. Like I said, great questions, both from Cypress X and from SMF 790. Really appreciate it. Don't forget, anybody can ask me questions anytime you wish. Or simply, offer up an opinion. Tell me what you're trading, for example. I mean, that's a really good, interesting point, the moral question about greed and recession by these oil companies. But like I say, it's a very difficult area to talk about, and not to talk about, but to try and find what is right, what is the right way of doing it. But don't forget, as well, as I always say, if you think of a question later, okay, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to it next time I go live on air, which, of course, is happening later today at 2 p.m. UTC to discuss the US session. So do not forget to join me for that if you can. If there is no questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting, useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply cannot help, then give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.